You do not want to miss this episode. We're going to dig into our March update. We're going to talk about the stock market, Bitcoin, economic uncertainty in Canada. We're going to talk about real estate, what's going on in our industry, what's going on at Control and Compound. Hi, everyone. Welcome to Control and Compound. I'm Darren Mitchell, and joining me as always, Christina Wyatt. Christina, how are you doing today?
Hey, Darren, I'm doing great. Lots to talk about in our March update. Nice thing is we're in March, so we're getting closer to the end of winter, which I'm happy about. So here we are in March, only a little bit left, right?
It's it's getting pretty exciting. I'm still riding the high from Canada's gold medal there in the Four Nations Cup. So that was pretty fun time in Canada when that happened, and I look forward to the Olympics next year to see hopefully Canada win gold there. But let's jump into it, Christina. Let's start with the Bank of Canada. People are always wondering, are they decreasing rates? What's the forecast? What are they doing?
Yeah, so on January 29th, that was our last update. The Bank of Canada did reduce its policy rate by 25 basis points. So we saw it drop from 3.25 down to 3%. So we did see another rate cut, continuing that gradual rate cut they have said, that cycling that they're doing. Now, the decision reflects moderate economic growth and inflation hovering around that 2% mark that they're looking for. So the next announcement is going to take place on April 16th. Between now and then, though, there's a lot going on, right? So they're going to be monitoring the trade tensions, which we'll talk about a bit more with the U.S., the impact of lower rates on the housing and consumption, easing wage pressures in the job market. So they're not guaranteeing that another rate cut will happen, but they're keeping open to adjustments. So we might see another one. Now, talking a bit more about that inflation, going into the inflation side of things, we talked about it hovering around that 2%. We did see it increase from December. It was 1.8%, in January up to 1.9%, so slightly higher, but still in that 2% target. The driving factors around that bit of an increase were energy prices. So gasoline prices surged 8.6% year over year in the month of January, really pushing up transportation costs. Natural gas also rose 4.8%, adding to home heating expenses. So something many Canadians did feel firsthand during the winter months.
But if we get the tariffs on our oil, I assume we're not going to be able to sell it to the States. So that's really going to bring down the price of gas here in Atlantic Canada, because we'll have to burn Canadian. Oh, no, wait, we use Saudi oil because we don't have a way to get it to Atlantic Canada. So yeah, that won't help us at all. Wow. I'm surprised gas price is up 8.6%. That's significant because that affects every sector of the economy. So it'll be interesting to see what inflation does in the next couple months just with gas alone.
Yeah, absolutely. So now if we look at the Bank of Canada's core inflation measures, so removing the volatile features, the CPI trim, CPI median, they're around 2.7%, the CPI common around 2.2%. So that's what they're looking at. But what are Canadians actually feeling? Well, they're definitely feeling those gas prices, the energy prices. The national home costs increased 4.5% year over year in January. Rent prices specifically saw 7.1% year over year increase since last year. Now that is down a bit from 7.7 in December. Still high though. Everything's still really high. So what is making us stay in that 1.9% range? What is keeping these numbers down when they're looking at them? Well, one of the biggest things for sure is that temporary GST HST break that we had from December 14th to February 15th. So that's over now, right? Now, that tax break, though, did put restaurant prices down 5.1% year over year. Alcohol purchased from stores was 3.66% cheaper. Children's clothing, toys, printed books, all of that had some temporary relief. But the break now is expired, right? So prices are set to rise again. What's that going to do? Now, the February 2025 inflation data is going to release on March 18th is when we'll get those numbers. And that's going to fully reflect this GST HST break. It's coming back. So they're going to be looking at price rebound. So the items that were tax exempt, that's going to come back. They're going to look at consumer spending. They're going to look at energy prices. And I think it's going to change a few things. And when we get that data on March 18th, that's really going to reflect what what they're going to do on April 16th with that Bank of Canada announcement. So lots going on there. And I think that temporary measure is going to kind of do full circle, and we're going to see some numbers change going into the following month.
Yeah, I'm reminded of the story where the boy puts his finger in the hole in the dike and says, "Oh yeah, that'll solve it." And then for 2 months they had a finger. Now they've taken the finger out. I don't know what's going to happen next. Uh, wow. Anyway, there's so many different levers that go up and down and stuff. So hopefully something will go up to compensate for the removal of that tax. But sure would like to see permanent tax reductions instead of this temporary stuff.
Absolutely. And talking about hoping to go up, we can flow into the Canadian dollar, which we're all hoping will go up. But at this point, it's trading at approximately 70.5 US cents as of today. So that's reflecting the ongoing economic pressures and recent policy changes. So that dollar has a lot of pressure on it right now. I mentioned briefly the trade tariffs, but on February 1st, Trump said there were 25% tariffs on Canada. What did we do? Well, we said we're going to do retaliatory tariffs, and we're going to fight back. And at the end of this, they decided to take a pause. So they paused until March 4th. Now we're all sitting in limbo, as our dollar is also sitting in limbo, waiting to find out what's going to happen with these tariffs. So that's huge, waiting for that announcement. We've got the Bank of Canada making cuts. Doesn't really help our dollar by much, right? So that's impacting it. And then we have the political changes that are happening. Canada is just very uncertain. Like we're certain in hockey, thank goodness. We're good at our hockey, but everything else over here is really in limbo. We don't have do we have a prime minister? Trudeau stepped down. We don't have somebody in quite yet. Now that is set to happen in March. So we're hoping some of this uncertainty kind of removes itself in March. But until that happens, our loonie is in limbo, is how I feel about it, until some of these things kind of settle down.
Come on, Looney, you can do it. Oh. Okay, let's jump into some economic news, and I've got some great news to share today. Now, this is depends on where you live in the country, but hopefully this is a trend that'll spread across the country. The Premier of Nova Scotia, Tim Houston, came out with his budget, and Christina, I was as shocked as anyone when a politician delivers on the promises they campaigned on. But Premier Houston, congratulations! He announced, first of all, for those of you living in the East Coast, he's getting rid of the bridge tolls that we've had since I think 1970. So that's hit or miss. It depends what side you're on that. But the big news for business owners in Nova Scotia, and this is the trend I'm hoping goes across the country, is Nova Scotia reduced their small business tax rate from 2.5 to 1.5. So remember the small business tax rate? We did a podcast on that. It's 9% federal plus the provincial. So we always say, roughly 12%. Well, Nova Scotia, it's actually going to be 10.5% now. And that's effective April 1st. And then the other promise made, promise kept was their small business tax rate applies on the first 500,000. Well, in Nova Scotia, they've bumped that up to 700,000 now effective. And that's a big deal. Now, keep in mind, when you exceed 500,000, the federal government didn't change their tax, which is a big part of it, 15%. But the Nova Scotia part, prior to April 1st, today, it's 14% starting at 500,000 plus. Now it's going to be 1.5% provincially, all the way up to 700,000, and then jumping to the higher amount. And again, the goal of this was to try to encourage more businesses to open, relocate, come to Nova Scotia. So great news for business owners based in Nova Scotia anyway. And then if we look at another interesting report, there's a couple reports came out talking about these provincial trade barriers and regulations, because that's really, all of a sudden tariffs start coming, and then all of a sudden Canadian premiers are getting together and say, what can we do? And I say, great for them. Where you been the last 20 years? Because StatsCan came out and said the increased regulations since 2006 to today in Canada, in our country, in our provinces, have shaved off at least 2% of our GDP. That's a significant portion due to regulations. The Treasury Board came out and highlights how Canadian economic growth is negatively impacted by these regulations that have increased 37%. Regulatory costs mean more businesses close, more businesses don't open up. Some of the big hit industries are constructions, resource, really tough sleds for them when it comes to increased regulations. And then our former Bank of Canada, he had a great rant on this. Stephen Bullets came out and said, so the Johnny on the spots, or the porta potties, different provinces have different rules on what the toilet seat can be. So in some provinces, it needs to be a circle, continuous circle for the seat, and some you need that little slit in the middle. So different provinces have different rules. So you can't take a Johnny on the spot from one province and move it to the next province because it might not hit code. And this is what the government is worried about, the toilet seats on Johnny on the spots, Christina.
It's crazy, eh? And I was having a conversation with my dad not too long ago, and he was talking about, he's in Victoria, and he was saying these Johnny. It's so funny. It was the Johnny on the spots. The same problem is that they changed the rules, and now everybody needs to have, if you're doing any type of construction at all on a property, even like a home renovation, you need to have one there. It's causing a bit of a issue because they don't have enough for them. Like there's people that a roofer previously wouldn't have had one, now they have to have one. It's it's crazy that the toilets are what we're focused on.
So control and compound, we're licensed in every province except one, and 3 territories. And every single province has a different way we have to get licensed with a different insurance board. And it's almost a full-time job for one of our staff to literally manage all these different provinces, because PEI is one set of rules and Nova Scotia has a different one and Ontario has a different, and every province has different rules, and they can't get together and just say, okay, this is what you need to do to be licensed in Canada for life insurance advisors. No, every single province, and the red tape involved in that just discourages people from starting businesses, expanding their businesses. Stephen Pullitz, the former Bank of Canada, like, we're talking about these US tariffs, how brutally terrible they're going to be for our country. And he goes, if we just got rid of the interprovincial trade barriers, it would more than make up for the potential US tariffs. Like, think of that. We have a made in Canada solution here. Stop with all the interprovincial trade barriers and regulations, and we could eliminate the impact of the US tariffs. Or hopefully the US tariffs don't come and we could significantly grow our GDP. Some economists say it could grow 4 to 7% if you remove all these regulations and interprovincial trade barriers. And even employment, they estimate employment in Canada would be 2% higher. And 2% employment higher is significant if it wasn't for these increased regulations. Not just regulations. We're not saying get rid of all regulations. It's the increased regulations have decreased, like the porta potty example, have decreased employment by 2%. So that's a significant area, and that's why our GDP per capita is continuing to shrink. Now, we did have that manufactured GDP where we brought in all kinds of new Canadians, so our overall GDP still went up. But really, when you really look at it as an economist, you look at GDP, it's the per capita GDP. How much did each worker produce? And that continually is going down. And in a big part is because of government red tape, regulations, and increased regulations. So Canada, let's solve this in-house here, and let's get this fixed. All right, Christina, jumping into the stock market, the U.S. market's up about 1% month to date, 4% year to date. Canada, we're up about 1% month to date and 2.5% year to date. And as we previously mentioned, all the focus, all the attention is on the potential tariffs and new Liberal leader and potential election. So those are 3 significant things happening. Not just in our economy, that'll affect our housing, that'll affect our stock market, that'll affect just about everything in Canada. So lots of people watching that. And then if we jump into Bitcoin, and I'm not saying people were listening to our podcast, people in the know were listening to our podcast, but I talked last month about 4 or 5 factors that could really drive a demand for Bitcoin. And a couple of the ones I mentioned, as I said, more friendly regulation, pension funds starting to buy Bitcoin, and corporations continuing to buy, or more corporations buying Bitcoin. So since then, again, obviously not because of the podcast, but some of the announcements that came out. A recent regulatory filing said that 12 states have now in the US have started buying Bitcoin or Bitcoin related stocks in their pension funds. So 330 million went into Strategy. Now Strategy is formerly what was called MicroStrategy, Michael Saylor's company, which is, it's not Bitcoin, it's basically leveraged Bitcoin, so it's like 2x Bitcoin. So again, they're kind of getting around the fact they're not buying Bitcoin directly. They're buying a stock that really represents 2x of Bitcoin. So leading the charge there was California. The California Teachers Fund put, I think, $78 million into it. And then another pension fund for public workers in California put about $68 million into it. So we're seeing pension funds start to move there. And again, if we take 1 or 2% of pension funds and start moving into Bitcoin, the demand is just going to skyrocket. Corporations, speaking of Michael Saylor, another month, another couple billion. Strategy, former MicroStrategy raised $2 billion in convertible bonds they're going to use to buy Bitcoin. So, in a day, they just get $2 billion more. And then as far as regulatory stuff, so again, Trump wants to be pro crypto, build all kinds of crypto businesses. So in the last administration, they had a what they called a crypto enforcement team. And this was a pretty big team that went around and basically tried to make everyone's life miserable that was in the crypto world because they weren't big on the crypto. Well, the current administration has disbanded that group and came out with a much friendlier, much smaller, they call it a cyber unit, and they say it's a regulatory friendly approach to digital assets. So now, again, real shift in the regulations. We talked about how regulations hamper business in Canada. Well, now we're seeing regulations relaxed in the US, more business friendly to try to spur growth in that sector of Bitcoin, whether it be mining, all the other spin-offs of Bitcoin. So that all those things are going to continue to drive demand. Now, again, the price has been pretty flat here, but if you've heard our Bitcoin before, it could be literally 10 days that make up 90% of your gain this year. So, it could be next week when we see a massive spike and up or down. We're not saying buy Bitcoin. We're not Bitcoin experts, disclaimers out there. But again, I think it's going to be an exciting year for Bitcoin. Time will tell. All right, Christina, what about real estate? We talk about that. Let's what's the trends going on there?
Yeah, so real estate, or the Canadian real estate market is also navigating this complex landscape, right? It's holding true as real estate does, but it's got its pressures on it as well. Now, if we look at some stats, the national housing trends, home sales, January 2025, they had a 3.3%, and this is across the country, 3.3% month over month decline. So home sales were down a bit, but if we look at this time last year, they're actually up 2.9%. So home sales are moving. It's going good there. The market saw an 11% surge in newly listed properties in January, so making it one of the most significant monthly increases on record. So 11% more new listings. That's good. Home prices, they remained relatively stable, a slight 0.8% month over month decrease, but a marginal 0.07% year over year increase in January. So, it's stable, right? We talk about the landscape being different right across the country, which it is. So if we go to different provinces, it's going to tell a different story. Last month, we talked about the Greater Toronto Area, so the GTA experiencing an 18% decline in sales in December. Well, if we look at January, they did have a nice rebound of 10% in sales. So we saw that come back up. The price index there has remained very stable too. So the price is around $1 million. So it remains stable month over month, a modest increase of 0.7% year over year. So that's just talking about the GTA. Obviously, things are different in every province as you go through. But the overall market outlook, it's good. It's not bad, right? The Canadian Real Estate Association forecasts an 8.6% increase in home sales for 2025. So we're going to see an increase there. That's driven by those lower borrowing costs, the pent-up demand. The national home price is projected to rise 4.7%, reaching $722,000. Now, the potential of these trade tensions, though, with the U.S. has introduced uncertainty here as well, right? The threat of the tariffs has already impacted buyer sentiment. If you look at the end of decline decline sale, or at the end of January, there was some decline in sales. And that's people, getting a little bit nervous about what's going on. So steady though. Now, if we look at the real estate investing market, which we've got a lot of people that listen that are real estate investors, I wanted to dig into some stats that I've been seeing, and just to kind of keep on people's radar. So, like I said, Canada's housing market has remained resilient, but there has been rising delinquency rates, especially in alternative lending. So, this is raising concerns. According to the latest CMHC report, 90-day mortgage delinquencies remain low at about 0.9%, so still below pre-pandemic levels. However, mortgage investment corporations, so MICs, which they serve the riskier borrower, right? So, we're looking at riskier borrowers. They're seeing delinquencies surpass their pre-pandemic highs. So they are going up. There are going to be 1.2 million mortgages set for renewal in 2025, and most of these signed rates at 1%. 5 years ago. Okay. That's not what they're looking at today. So there's going to be significantly higher payments. So even with the Bank of Canada, cuts, it is not going to align with that 1% mortgage that the regular individual has been paying. So the financial strain is strong. They're already seeing delinquencies on, like, people will pay their mortgage. They will cut, a car payment, a credit card payment, and they're already seeing those delinquencies go up towards the end of 2024, which could show that we'll see that more on the regular housing side. Something I wanted to touch on, though, going back to real estate investors, is developers. So Canada's residential development industry, and I took this fact, it's facing an unprecedented financial crisis, is what they're saying, with real estate insolvencies up 42.5% in 2024. So that's the highest level in a decade. The construction sector has also been hit hard, seeing a 30% rise in insolvencies from 2023. So that's making it the most impacted industry, which is pretty significant, right? That's scary stuff. Despite the interest rates dropping to 3%, uncertainty remains here, right? There's rising construction costs. We talk about those tariffs. There's municipal permit delays. We talk about that red tape that's set up right across. You've got shifting investor sentiment. So like, people are, they're getting weary. They don't know if they want to be invested, which is really slowing down new development, particularly multifamily housing, where we need it most. Like, this is, Canada needs this housing, and we're falling short. At the same time, what's happening is that banks, private lenders, they're tightening their credit, and they're making it harder for smaller developers to secure financing, because they have to protect themselves too, right? And with lender enforcement on the rise, more distressed real estate projects are going to hit the market. But those that are invested in those projects, they're going to take a hit too, right? So it's definitely challenging for some of those passive investors, I think, where we have to do a lot more due diligence. Not saying that the projects aren't good. There's still very good projects out there for sure, but it's very important to do your due diligence, because this is what the market looks like, right? This is what the numbers are showing.
Yeah, like Christina, I'm reminded of the analogy, like when the stock market's up, you could, you could take an animal and throw a dart at a dartboard and hit a stock that's going to go up. But when things are volatile, then you really need, professional help, whether it be part of a group, part of a conference, something, learning from experts, because it's really tough for a lot of people to do it on their own that don't have the experience that some of the other people do. So find a mentor, or find a partner, join a real estate investing group, get the education, because like you said, there's still all kinds of great opportunities out there. We're certainly not saying real estate's going away. And I think, the fact that they're not building as much, is going to create more opportunity for real estate investors, because we're going to have a less supply. So the costs are going to go up. So, it may be a great time to get in. Again, we're not suggesting you do anything. We're suggesting you go get expert help on that. But it's not a good long-term solution if we're not building homes, because we need homes. Okay, so let's jump into some industry news, someplace that lots of people are putting money these days. So LIMRA, that's the insurance regulator, they came out with they came out with new premium sales for 2024. So life insurance premium in Canada last year jumped 8% in 2024, set a new all-time record. In the fourth quarter, we saw premium a record $2.4 billion in 2024, 8% higher. And of that $2 billion, 69% of it was in whole life. So 69% of all the premium that came in last year in Canada was whole life. So that's $1.41 billion went into whole life last year. So when people meet with us the first time and they're like, well, why isn't everybody doing this? How come I haven't heard about this? And it's like a lot of people have heard about this. Just new money that went in last year in Canada was $1.41 billion. And then, UL and term were significantly lesser degree a part of that overall number. But the other really interesting thing I found here is not only is whole life sales growing it, but they broke it down in the whole life sales and they go, okay, so whole life's almost 70% of the market of the overall premium. And of that almost 70%, 90% of that whole life premium was with participating whole life. And if you're followers of the podcast, we talk about participating whole life good, non-participating not good. And again, we won't break it down here for you today, but participating whole life is what you should be looking at. That's all we do at Control and Compound, and that represents 90% of the whole life market in Canada, and whole life represents 70% of the overall life insurance premium. It's where the smart people are putting the money today. All right, moving on to CNC news. Christina, we launched some monthly live webinars, and this has been really kind of cool for us. This is the first year we did something like this, and we're getting great feedback because a lot of listeners are out there and they go, oh, well, I don't want to sign up for a meeting, but I want to ask a question. So you can actually come to these live webinars and ask Christina and I a question. So we provide an education section to it where we educate you on the concepts that we work with. And then we have question and answers throughout the webinar, and again at the end, where people can say, well, how does this work? How does that work? What does this mean? What does that mean? And we're getting a lot of great feedback on that. The numbers are really starting to skyrocket. So we're going to put the link below in the show notes that you can click on that and find the next live webinar we're hosting and sign up for that. But that's been pretty cool. And then, Christina, we had that 2-day EOS annual planning, and that was just an amazing experience to cap off our first year with EOS. Really enjoyed those 2 days.
Yeah, they were awesome. We talk a lot about our EOS journey in throughout our podcast and our updates and sharing what we do. And I'll tell you, I didn't even realize we were a year into it until we were doing our 1-year planning session. But the biggest impact I thought was aligning our goals, obviously, as a company, but then being able to take it back and share them with the team. So just in the past week or so, we came back and we shared everything that we did in that planning session with the team. So now everybody's aligned and ready to go working towards those goals with us, which I think is super exciting. So it's amazing to see where we've come using the EOS system. So highly recommend it if you've looked into it.
Yeah, we have our staff is usually, it's a great culture and people get excited to come to work, but it's just gone to the next level with this sharing of the EOS goals, where they see where the company's going and what part they're going to have in it. And I think they really just appreciate, oh, so this is what you guys been working on. Oh, this is all those meetings you guys go to. This is really cool. I didn't know we were doing this and doing that. So to get the buy-in from the team and get them even more excited about what we're doing, it was awesome.
Absolutely. And I have another big, exciting announcement. Super pumped to say that we're going to be at the Powerhouse Conference in Toronto. That is going to be held May 23rd, 24th, 25th, downtown Toronto. Like, I think they even have some of the event at the top of the CN Tower. So it's a pretty epic event every year. They have changed the name. It would have been, you might have previously heard it as Multifamily Conference. It is Powerhouse Conference this year, and they are starting to announce some of the speakers that they're going to have on the stage. And again, as usual, they're delivering. They've got some big names. They've got A-Rod, the baseball player, not just baseball player though, huge real estate investor, coming to speak on the stage. They've got Michelle Romanow. They've got Haley Wickenheiser, hockey hero here in Canada, right? And then obviously we've got Darren Mitchell hitting the stage too, which we're very excited about. So tickets are now on sale. You can hit up Powerhouse Conference online. You can there's different types of tickets levels that you can pick, but we're going to be there. Our team's going to be there, and I'm getting excited.
Yeah, I'm excited for that. It's always a good event, and I really like actually the changes they made. So traditionally it was more focused on real estate investors, and there's still absolutely a lot of real estate focused stuff going on there, but they're also incorporating business owners now. So there's going to be a lot of stuff for business owners and real estate investors. Now, a lot of our listeners are both, but if you're a business owner and not necessarily a real estate investor, I think this conference is going to be great for you now. So opening that up to business owners and real estate investors, I think was a wise move. Looking at our podcast, we had a great month last month. We had Calvin Hexter on out from Edmonton talking about investing in the Edmonton region. Thought that was really cool to get a take on some of the markets. You know, we spent a lot of time in Ontario and in some of these bigger centers, and we think what's going on there, but then it can be a absolutely completely different market. And it was really cool to hear about the exciting opportunities out in Edmonton. So that was neat. And then we did our CPP OAS Dirty Little Secrets Part 3, and that kind of exploded online. We got all kinds of views and comments and feedback on that. So if you haven't checked that out, make it happen. We had our small business tax rate for business owners. And again, I broke down that 500,000, what happens under 500,000, over 500,000, really timely with the Tim Houston changes in Nova Scotia. So if you're a business owner and you haven't listened to that, I encourage you to go back there. And then we have Beyond Infinite Banking, the power of high cash value life insurance. So, our specialty is cash value life insurance. We talk about infinite banking a lot, but there's a lot of uses outside of infinite banking for this product. The reason why $1.41 million of new dollars went into it last year, $1 billion went into it last year in Canada. So we break down some of the other uses of it. And then this month, Christina, we get another exciting month coming up. What do we got?
Yeah, lots of great podcasts to be released. Our guest for this month is Karina Guzman. So you had sat down with her and had a conversation about land development and some pitfalls that happen there, some tips and advice. So that I'm excited to listen to that one.
Real opportunities too, yeah.
Yeah. And then we've got Child Millionaire is the name of the podcast, but really we're digging into high cash value life insurance policies, the infinite banking strategy for kids. We actually have an example with numbers that we go through in that one. So that's good if you're interested in kids policies. We have financial terms you need to know. This one was pretty neat. We kind of dug into some different business terminology, accounting terms, things like that a business owner, we sometimes we think we know, myself, and then we learn a bit more about it and kind of dug into those terms and how we use them. And then we also did infinite banking as a backup plan, which is kind of cool because it talks about how we can use this strategy as our emergency plan. We talk about it a lot for opportunities, which it's absolutely there for, but we dug into how it can be used in emergencies as well, which is pretty neat.
Yeah, I enjoyed that one. Awesome. All right. Well, that's a big update for the month. Lots going on. That's the March update. Thanks for watching. Thanks for listening. Have a great day.
Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.